The meme stock craze is back, and Bed Bath & Beyond is soaring up to 70% per day. What exactly is going on here? So when you look at meme stocks, what exactly is happening? Let me explain this to you, because remember, guys, this happened a ton back in early 2020, right when COVID was happening. This started happening with GameStop, AMC, Nokia, and tons of these smaller brands. Now, what was the reason for that? So the hedge funds, these are the big guys on Wall Street that they're the ones that make all the money. They're the evil people to the mainstream people. You had these Wall Street guys that basically figured out how they could go after the hedge funds, how they can go after the guys with money. And I'm going to say this right now. They did this in the most brilliant way possible. None of this was illegal. The illegal part was probably what the Wall Street guys did as far as stopping trading, et cetera, this and that. So listen, guys, if you were a part of this, I actually do commend you. Not going to lie. So what happened? These hedge funds over here, we're going to pick GameStop for now. We can pick BBBY because it's happening right now. We could pick AMC, any of those. These hedge funds went short on these stocks. So what does that mean? They were saying, if I can go and let's say GameStop was sitting at $5 because that is what it was doing at the time. Their bet was that this thing was going to go basically to zero. They thought that this was a dead company. It's going to zero. So they were going to put a short position on it. So what that meant is that they were betting that the stock was going to go down. If it's at $5 and it drops and it goes to $1 per share, that means that they make a gain of $4 per share. Unlike when you buy something and you want it to go up. So if this goes up in price, let's say this $5 goes to $10 a share, they lose $5 a share because they're betting against the stock. Now, the risk of shorting, of course, is that you have unlimited loss potential. If you're at something at $5, this thing could literally go up to infinity. The only place it can go down to is zero. So your loss potential is unlimited. Now, what exactly happened? They were short on GameStop at the time. We're just going to talk about GameStop here. 140%. They were short 140% of the float. So they were just maxed out betting that this company was going to go down and they were going to make money on the way down. Wall Street Bets realized that they were so short. So they were very, very exposed here. This was a cheap company. Market cap wasn't very high. If you get a lot of people with a little money, you can make things happen over here. So what did Wall Street Bets start doing? They started buying GameStop. And that stock started rising from $5 and it went to $6 and it went to $7 and it went to $8. And eventually it just started going higher and higher and higher. As the price goes higher, what happens? These hedge funds start losing money. They only have so much. Obviously, they have billions, but they only have so much. And once their loss exceeds the cash that they have in their account, they're going to get margin called. So this price just kept going higher and higher and higher. Let's say it got to $50 a share. So they were down $45 per share. So what do they need to do to exit their position and stop the bleeding? Well, what they need to do, because they have already sold short, the way to get out of this is to buy back your shares. Buy to cover. And as you buy to cover, what happens? You are actually going in, what they're doing when they're exiting their position is buying shares. So what happens? This $50, it keeps going higher. They sell 100,000 shares, the stock price actually goes higher. So these Wall Street Bets guys were actually buying shares, and these guys were actually buying shares. And this is what you call the short squeeze. These guys made it happen. They started that stock climbing, and as that stock kept climbing and climbing and climbing, they started buying to cover, getting out of their short positions, stopping the bleeding, and the price just went higher and higher. And I think the GameStop got to a price of about $400 a share when it was all said and done. There was one hedge fund that I know of that actually went out of business. They couldn't get their margin call off. Now, let me explain to you what Robinhood did, what Charles Schwab did, what TD Ameritrade did. What they actually did is said, okay, we're going to protect the hedge funds. We're going to protect the guys on Wall Street. And it was funny that Robinhood did that because they were supposed to be the man of the people out there. What they did is they said, okay, guys, you Wall Street Bets people, you can't buy any more shares. All you can do is sell your shares. And as they sell their shares, that $400 number, it starts trickling down. And these guys are able to buy to cover, and they're able to buy to cover at a lower price, $300, $200, $100, whatever it is, and the loss lightens up. And this is how they continue to not totally lose their ass here. Now, at the same time, it was said, I don't know if this is true, but these hedge funds were able to short a little more, and as this price started coming down, they were actually making more money on the way. Nobody really knows. It was never confirmed. But this is exactly what a short squeeze is, and this is how Wall Street Bets was able to go after these major hedge funds and win at the hedge funds game. Now, what's happening with Bed Bath & Beyond right now? So guys, before I get started with the Bed Bath & Beyond and go into it, I'm going to introduce myself. My name is Mo. Paul and I are value investors. We have a process that works for us over a long period of time. You guys might be doing this meme stuff, and this process works for you, and that's fantastic. But if it ever stops working, come and find us. And by the way, one more time, I commend you for doing this because it was absolutely incredible. So look at this, and it's still not over. It's still not over. Look at Bed Bath & Beyond today. It's still up 60.25%. I think this was as high as 70% at some point. Now, the action comes from this activist investor, Ryan Cohen. So this Ryan Cohen guy has been on the side of I'm going to just call it the Wall Street Bet side for simplicity, on the side of them for a very long time. He went out and traded a bunch of options today, and he was basically betting. He had call options, and he's basically saying that Bed Bath & Beyond can rise as high as $80 a share by January of 2023. And that just sent the stock soaring. Our stock right now is sitting at $26.38. Now, what is behind this company? I would really like to dig into this and figure this out, because when I go to Bed Bath & Beyond stores and everything that I've heard, they have been the attack of activist investors for probably a year now. And I go into these stores and I look and say, what is going on with this inventory? It's sitting here. A lot of shelves are bare in some cases. What exactly is happening with this brand? So let's take a look at the numbers. It's a $2.37 billion market cap. Let's see here. They don't have a PE. They have not made money in the last 12 months. Their profit margin is negative, which makes sense. Now, gross profit margin is 31.6%. Let's see here. They are paying a dividend, which 5-year average they can afford. Let's dig in a little bit more. Let's get into the income statement. So they were a growing company. They really were. I mean, it was very, very slow growth, and then COVID happened, and it seems like everything kind of hit the fan for them. Even their let's see their net income. Their gross profit wasn't bad. Let's look at their net income. Their net income was inconsistent. I mean, $1 billion, and it would just started trickle, and in 2020, that is when or 2019, they actually started taking a hit. So this company has been very interesting for a long period of time. They've been buying back shares very aggressively. You see, in 2013, they had nearly 220 million shares outstanding, and now they have 89 million shares outstanding. The debt situation, I'm very curious to see. Total current assets of $2.36 billion, total current liabilities of $2 billion, total long-term liabilities of $2.88, total liabilities of nearly $5 billion. So, guys, I'm going to run a stock analyzer tool on this. You see, I'm not terribly surprised by what I see here from the 8 pillars, but I'm going to run a stock analyzer tool on this. Remember, when I start looking into this, I am saying, okay, there's a point here where I have to ask myself this question. Is Bed Bath & Beyond going to be around in 5 years? From everything that I'm seeing that's going on out there, I would probably err to the side of no. But that doesn't mean that I'm right or wrong. I've thought the same thing about Big Lots. I've thought the same thing a lot of different companies. But right now, as we sit, I don't necessarily think that this company is something that I would be betting on going forward. But if they do, what kind of desired return do I need to see? And to me, this is where I can go in there and really put in a very large margin of safety, which will help me. So revenue growth. I'm going to go with -2, 0, and 2 going into the future. Now, these numbers could, of course, change if the activism kind of leaves and the normalcy comes back to the company before they go away. Profit margin, I'm going to go with a 2, 3, and 4. Free cash flow margin, I'm going to do exactly the same thing. And remember, guys, I'm going pretty conservative on these numbers just because this is a risky bet. This is absolutely a risky bet that I would be making. especially at this moment in time. And for my return, I'm actually going to go with a 20% return. If I'm going to take this much risk, I want to see a very big return. 10-year analysis, let's see what the number comes out to be. I can't imagine. Well, there you go. So if you actually believe this, I'm actually quite surprised right now because these are pretty conservative numbers. I have revenue growth of -2, 0, and 2 over the next decade. And it's $26 a share right now. It could be a value play. It absolutely could. But I think that it's not just about numbers in this case. This is just a weeding out process. Now it is, okay, the numbers are kind of making sense. They're getting there. With the exception of the stock going up $10.50 today or 65%, it's in the wheelhouse for me. Now I got to go figure out what exactly is going on behind the scenes. Guys, if you're ever interested in the process that I use on a daily basis, from value to trading to options, check out this video right here. I'll catch you on the flippity flop.